Hello, Craig Deegan here. Welcome to our video on Chapter 11, which addresses accounting for leases. Now, a lease is something that conveys a right to a lessee to use a particular asset in exchange for the lessee making a series of lease payments to the lessor. Now, as we've learnt in other chapters, it's not a requirement for asset recognition that you own an asset, it's that you control an asset. So to the extent that a lease conveys control of an asset to the lessee, then we can recognise that asset in the balance sheet and a related liability. Now, leases, as I've just indicated, involve a lessee, the party making the payments, to the other party called the lessor, who legally owns the asset but gives up control to the lessee in exchange for the series of payments. Now, when we're accounting for leased assets, we're going to create an asset and a liability. The lessee does have an obligation to make lease payments, and that's got to be recognised. And the lessee also has control over an asset that's got to be recognised. So the general principle is that leases must be recognised for balance sheet purposes. Now, there are some exceptions to that. If the lease is less than 12 months, we don't have to recognise it for balance sheet purposes. We'll just treat the monthly payments or whatever as an expense. Or if it's a low value item, and the sort of numbers that often get used is if the lease is for an asset that's worth, say, less than $5,000 US, then you don't recognise the asset. Now, a lease is to be recognised from the commencement date, which is when effectively the lessee gains control of the asset. Now, in terms of the amount that we recognise for the lease asset, we recognise the lease asset and the lease liability on the basis of the payments that are going to be made in the future. So in terms of the lease liability, we look at the stream of future payments that have to be made, and we take those payments at their present value, and we recognise that as a liability. Now, you'll have to read carefully through your chapter to understand what payments we actually capitalise as part of that lease, and they will include the fixed payments. If there's a guaranteed residual that the lessee must pay at the end of the lease, we would include that. If there's a bargain purchase option at the end of the lease, we'd also include that as part of the lease liability. In terms of the asset, we'd also include the present values of those lease payments, plus any upfront payment and any sort of any costs that were created at the outset to take on that lease, such as the legal costs. Now, the lessee might also have to pay for service costs as part of the lease. So, each month there might be an extra $100 that the lessee is committed to paying to maintain the asset. We don't capitalise that. That's just part of a period expense. Now, throughout the life of the lease, we allocate the lease payments to interest and repayment of the lease liability. So realise that as you're making each lease payment, it's not all treated as an expense. Some of it will be an interest expense, some of it will be repayment for liability. Now, the leasing standard really only came in a couple of years ago. It did cause many companies to put leases on the balance sheet that weren't previously there. Read through the chapter, understand what that did for things like gearing ratios. It brought a lot more debt on the balance sheet, and it brought a lot more assets on the balance sheet. The chapter also spends some time, not as much time, on accounting for leases by the lessors. Realise if we're accounting for the lessor, we categorise the lease as either an operating lease or a finance lease. If it's a finance lease, that's the lease that goes on the balance sheet. Also realise that with the finance lease, the lessor replaces the actual asset in the balance sheet with a lease receivable. Okay, so once a lessor has leased an asset, they no longer control that asset. It might be a machine. So they'd remove the machine from the balance sheet and they'd replace it with a lease receivable. Anyway, that's a quick sort of look at the issues to do with leasing. Please read the chapter carefully. As always, have fun. And as today's tip, if you're going out in the sun, always make sure to get a stylish sun hat. Okay, be good to your friends. Bye.